I'm certified financial planner, chartered tax consultant Joshua Duvall from Duvall Wealth and Tax Planning, and just wanted to bring you a quick video to talk about our custom tax planning report and the process we go through to help clients with their tax planning needs throughout the year. So if you're not aware, we do help clients throughout the year on an ongoing financial planning, investment management, and tax preparation and planning process. All of our clients pay a flat monthly retainer, which covers all the work that we do in the planning, investments, and tax spaces. We just finished up tax preparation and filing for all of our clients. So that includes personal taxes as well as any clients that have business tax returns, 1120Ss or 1065s that need to be done. Trusts are included in that as well. So as a result of the tax preparation and filing that takes place, we produce a custom tax planning report, which I'm getting ready to share with you. And I wanted to take you through some of the specifics of that report, as well as help you understand the process of tax planning and why it's so critical for the work that we do with our clients. So let me go ahead and share my screen and we'll go through this process so you can get an idea of exactly what it is that we do for clients. So as you can see over here on the 2023 tax report, this is a client-facing document. I have the name blacked out here, but I wanted to walk you through some of the key figures of this report and help you understand exactly how it's used and what we do with it with clients. So the first part of the report is all of the key figures and different schedules of the tax return. So it's sort of a look backwards as to what was just filed. So you have your income numbers, deductions, total tax paid, marginal bracket, your safe harbor for underpayment penalties, as well as anything that happened with your long-term or short-term capital gains. We have the marginal tax bracket broken out here so you can see exactly how much income you need to make before you get bumped up into the next highest marginal income tax bracket, as well as some of the different credits and deductions that are available based on income. As you can imagine, most of our clients are higher income folks, so tax planning has to be more creative than just some of the standard things that you might have access to. We also have a breakdown of the long-term capital gains tax rates and where you might stand there based on your other income. So for a lot of clients, 15 or 20% is where they're at. Then we get down into the different schedules that you might have related to interest, dividends, any of the long or short-term capital gains, as well as Schedule E income for rental properties, partnerships, S corporations, etc. The bottom part of this report is all of the standalone observations. These are really the tax planning items that you should either be aware of or specific things that you might be able to do in order to create a benefit. So utilizing backdoor Roths, understanding the net investment income tax, taking a look at utilizing HSA contributions as a tax shelter, understanding conversions for individual taxable accounts where you do conversions for your IRAs, your individual retirement accounts, excuse me, convert over to Roth, whether you're doing the backdoor strategy or just trying to get dollars out of the taxable bracket. We also have New York State, specific state, in this case, New York, but state observations that are available for clients. So, many folks don't even realize that at the state level, 529 contributions are deductible. So there's a number of different items that you'll see on this tax report. The reason why I bring this up and why I wanted to share it with you is not just to show you the custom report, although I think that's important, but to help you understand the broader conversation related to tax planning and how this report fits into the process that we go through for clients. So all of our ongoing financial planning clients receive support and services not only in planning and investments, but also in taxes. Once we file the return, we produce this custom report. It's literally the client's tax return laid over the state and federal income tax law, and then those individual items that fall through are the specific strategies that these clients could implement in order to create a benefit. Most of our clients are trying to do one of four things when it comes to the way that they're dealing with their taxes. First is figure out how to reduce income tax in the current year. And again, they do these four things usually concurrently, right? So it's not just one or the other. And I'll explain the idea behind diversification of the strategies. But first is to try to reduce income tax in the current year. How do we pay less income tax in this tax year? An example of that would be maxing out your retirement plans at work, right? Something simple. You get tax deductible contributions, they reduce your income and thereby reduce your tax. For clients that are similar to these clients in the 32% marginal bracket, every dollar you save in a retirement plan will save you 32 cents, right? You're literally creating that savings out of thin air. You move the money from your paycheck to your retirement plan account, you create 32 cents of tax savings for every dollar. The second thing people want to be able to do is create tax deferral. That's how we understand that you can push tax payment off into some time in the future. So there's lots of different types of accounts that create tax deferral, but instead of paying taxes in the current year, maybe you would choose to realize those taxes in a year in which other forms of income are lower. Maybe you have a gap year with employment or pre-retirement where one spouse is working and the other is not, and you're able to reduce your overall income and then choose to pay taxes where you would have a lower overall tax burden. The third thing people try to do is get dollars into tax-free buckets. So this is when we think about Roths, mega backdoor Roths, backdoor Roth contributions, Roth conversions. How do we get dollars out of accounts that are going to be taxable in retirement into accounts that are going to be tax-free? And yes, of course, you're paying the tax today, but we'll talk about why we ought to consider conversions and different backdoor Roths, mega backdoor, etc., for the third step of that tax planning process. The fourth one is how to get dollars into different tax buckets. Normally, people think of this as real estate, which are in your passive activity capital assets bucket, as well as capital assets that get accrued through brokerage accounts. So think about a joint taxable account, an individual taxable account, an account that allows you to realize gains, but have long-term gains taxed at a more favorable capital gains rate of 0, 15, or 20%, as opposed to paying ordinary income tax like on an IRA distribution at 32 or 35 or 37%. So these are the four steps that people are taking. The reason why we look at this holistically and try to help clients understand these four different approaches is because what we want to be able to do is build in tax diversification of your assets and investments. That's important, meaning that your different asset classes are going to be taxed differently. And we want to have diversification across that spectrum. We don't want to have a $5 million IRA or 401k and that be the only investment approach that we have, right? Because when it comes time to retire, you're going to be facing significant required minimum distributions. You have to take money out, you have to pay taxes, regardless of if you even need the funds, right? So we don't want to be pigeonholed into just one approach. We want to have tax diversification of our assets and investments. And that's where those four strategies come in. The reason we want to do this is specifically because the future is unknown. Tax laws are fickle by nature. They're created by the legislature. We've had times in our history where taxes were much higher. We've had significantly higher estate tax where you would pass on dollars after you were deceased to your heirs and have a significant amount of that estate be taxable. We're in a period now where taxes are relatively low, but we don't know what the future holds. We don't know what kind of tax laws would be changed related to real estate, investments, Roths, IRAs, deferral programs. All of that is law that could theoretically be changed by our Congress and Senate. So we want to have a hedge against the future, which is unknown, and create a diversified approach so that regardless of what the future brings, we have some form of option and choice in how we receive retirement assets or utilize investments in the future. That's the whole purpose of tax planning. So if this is something that you feel like would be helpful for you, please feel free to reach out. You can go to the website, duvallplanning.com, or you can send me an email, josh@duvallplanning.com. Again, all of our ongoing financial planning clients receive service in planning, investments, and taxes, which includes this custom report, as well as all the individual tax planning conversations and work that we do for clients. It's all part of the ongoing monthly retainer that allows clients to work together with us as clients of the firm. But if this is something that you feel like would be interesting to you or you'd want to learn more about, please feel free to reach out. Again, you can go to the website, duvallplanning.com, or send me an email, josh@duvallplanning.com. Thank you so much. Hope you have a great day. Bye-bye.